Hey, Tina. Welcome. Hi, Linda. Hi, Gabriel, Napesh, Ray, Dale. Cool. I want to check and see who's here. Hey, Michael. Hey, Drew. All right. Juan is here. Black Cat. Welcome. Darius, Ria, Ojan. Welcome. Pep. Ravindu, Ray, Adinda F. Taylor. Hey. All right, guys. So today we're going to talk about trading double tops and double bottoms, as you know. That's today's topic. And basically, we'll go over the rules for this. These are naked trading systems, which means they're without indicators. Many of you know, the book I wrote called Naked Forex, all about these sorts of setups. In fact, the one we're going to talk about today is in the book. And so I want to go over the rules specifically. Are there any people here that have a chart that you'd like to look at? If so, please type in the time frame of the chart and the market. So, for example, you might type in, the 4-hour euro yen or something like that. So what I have here is our pound daily chart, and I'm going to use that to illustrate the type of trade that I'm talking about today. Now, let me show you the rules on this. Okay, so Dale wants to see the odds. Which time frame, Dale-ish? And FX Red June wants to see the 4-hour euro. What I'll do is I'll just set up this one, which is our pound, and then we'll go from there. So you can see this, in the market. So this is how it works. I look for a zone. A zone is a support and resistance level. Let me just show you quickly what they look like. If you're new to this, you might not know this, but I'm sure for a lot of people it's old hat. Basically, this is what a zone looks like. I'm going to go ahead and put the blue and red candles on this chart, and I'm going to draw on the weekly chart. And then I'm going to go to the line chart. This is the pound dollar. And I'm going to back it up here a little bit, get a little bit of perspective. And I'm going to repeatedly draw these lines. These are support and resistance levels. These are where the market has found both resistance, like it did at these 3 touches here, and support, like it did here, resistance, like it did here, resistance, resistance, resistance. Okay? So ideally, these zones will be both resistance and support. But obviously, if we're looking at, like here, we have support, support, resistance, resistance. Now, it did break through, but it offered resistance first. Ideally, it will show up on those spots on the chart where the market found both support and resistance. So we want both. We don't want to just see resistance, and we don't want to just see support. At an all-time low, we'll see only support, and at an all-time high, we'll only see resistance. But generally speaking, we should see both. So that's how I draw the lines on here. And then if I go to my candles, you'll see it looks like that. And then if I go to my daily charts, you'll see it looks like that. So what we have right here is an example of what I would call a moolah double top. And here's why. It fits the rule. So a double top, as you all know, is when the market comes up, it hits a zone, it falls, and then it hits it again, right? That's a double top. But I don't trade just any old double top. My double tops have to fit specific rules, right? So this is what the rules are. Let's list them here so everyone gets them. Number 1, the both touches must hit a zone. A zone is defined as a support and resistance level. Obviously, this is a zone because we found resistance here before, and we found resistance here before as well. So this spot on the chart right here is resistance, support resistance zone. It hit it, it fell, came back up, it hit it again. So it needs to have both touches on the zone. If they don't, let me talk about, there's a slight exception to this, and I'll get into that at the end. But basically, that's the main number 1 thing. Both touches hit the zone. All right, so everyone's clear on that. Oh, Michael says, how do you copy the support and resistance so that it shows on the other time frame charts? Well, Michael, this one will show up. I'm on the pound daily chart here, but if I go to the 1 hour, it's going to show up, right? But I think your question is how do I draw them, if I'm trading the 1 hour chart? Is that fair to say? No. You just want to see them pop up on the chart. Well, if you draw them on any time frame on your MetaTrader, they'll show up on another time. Yeah. You want to know how to draw them. Exactly. Okay. Yeah, that's a good question. Basically, here's the steps for that. The reason why I went over it quickly is because I know most of you have seen it, but if you haven't seen it, like Michael, this is the basic idea. If you're trading, for example, the 1 hour charts, what I do is I don't, first of all, I don't trade the 1 hour chart that often. I do under special cases, but what I would do is I would go to the 4 hour charts, draw in my support and resistance levels, and then go down to the 1 hour. And even I would actually even probably draw the daily support and resistance levels and then go down to the 1 hour. The reason why is if I'm trading off a 1 hour chart or lower and I'm trading a support and resistance level, I got to make darn sure it's a strong one. And so the strong ones are going to pop out on the daily chart and on the 4 hour chart and on the weekly chart. But on the 1 hour chart, they can easily bust through there. So the general rule is when we're trading support and resistance, if we're using a lower time frame, and I define a lower time frame chart as below 4 hours. So anything below 4 hours, 3 hours, 2 hours, 1 hour, half hour, 15 minute, 5 minute, whatever, 10 minute, 3 minute, 1 minute. Those are all really, really difficult to trade unless you've got a really strong zone. So really strong zone means daily and 4 hours, something 1 hour. So the general rule is you go one time frame higher, draw on your zones, and then you're ready to go. And what that means, of course, is you're going to spend a lot of time waiting because the market's not going to hit your zone every single day or every single hour. And so if I'm trading the 1 hour chart, like for example, here I am. Let's go to the 1 hour chart here. Okay. Here's my daily zones on the pound. And guess what? It touched it here, November 12th, and then it just recently touched it right now, November 27th. So you're talking about, 15 days in between touches, right? One touchdown here, which, by the way, this touchdown here actually fits our criteria of a double bottom that we're going to talk about today, which is pretty cool. And then up here, all right? There's not much liquidity in small time frames. I think it's something like, I'm not sure, but I think it's something like $1 million traded every second. So every minute it's like $60 million. I think that's right. On average, Gabriel. Obviously, if you're trading, in the interbank market, like after New York closes or something, you're right. Or, maybe sort of on a slow Asian session, maybe. But there are many scalpers out there. So if you're a retail trader, there's going to be a lot of people, trading the 5 minute charts. I don't know how well they do, but there will be a lot of people giving it a try. And I do think that every second there's about 1 million traded every second. So on average, I might be wrong. It might be 10 million, but I'm not. I got to make sure on that. It might be 10 million. Okay. There it goes. It's going up now. Okay, so let's go to the chart here. Now let me show you what the rules are, guys. First of all, both touches must be on the zone. All right? We get both touches on the zone. We have here. We have a touch on the zone. So we have a touch here. Market falls, comes back up and touches it again. Right? Okay. The second rule is we want to see, it can be between 6 and 10 candles between touches. I would say at a minimum of 6 candles between touches. It's better really though if it's 10 or more. Okay? Oh, I just messed that one up. Whoops. Oh. I put the wrong thing in there. Okay. So number 2 is a minimum of 6 candles between touches. What do I mean by that? Well, when the market touches our zone, how many candles print away from the zone? Well, we would say that these 3 candles here touch the zone. This one, that one, and that one. So we have 1 candle away, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 candles away, 12 candles away, and then the 13th and 14th candle hit the zone here. All right? So certainly we had more than 6 candles between touches. Ideally it's 10, but some, if it's 6, it'll fly. So that's that one. Now, the next thing that we want to see is we want to get what's called a trigger candle, or basically the candle that kicks off the trade. And what that looks like is first of all, there's 2 types of trades we're talking about today. There are what I call moolah trades, which are double tops, which this one fits the moolah, these 2 touches. And there are whammy trades, which fit, whammy is the double bottom, okay? Which is what we saw on that 1 hour pound chart. So we want to see 6 candles between touches, and we want to see both touches hit the zone, and then we want to see a trigger candle. A trigger candle for a moolah, so these are going to be the rules for the moolah, okay? So everything is bearish. It's a bearish setup. Trigger candle is a big bearish candle, right? It's a big bearish candle. That's what it is. So if you see this candle and you think, well, this is pretty bearish, but you might look at it and go, I don't know about that. Like, the close was 1.6162. The low was 1.6118. Wasn't a bearish enough close. And the candle before it had a bigger body. Maybe I'm not interested in this one. I'll tell you what a bearish candle looks like, Michael, because this is a good question. Basically, there's 2 types of candles that are bearish. One would be a candle that's not tiny. In other words, this, doesn't have a lot of wick to it. It's mostly body. Like the best example of a bearish candle here would be this one right here, this red one, that one right there. That's a great bearish candle. This one is also a bearish candle. This red one that closes basically on the low at 61.53. And then this one right here, which is the one after it. And the reason, again, is this is a big, long body, very small wicks, and it closes basically right on the low. These are the 3 best bearish candles that I can see in this area. This one, that one, and that one. Now, unfortunately, those candles have not printed over here. So we have to wait. So let's just say that we did, because I probably wouldn't take it based on this red candle. That would not be an alert candle or a trigger candle for me. So I'd actually wait for the next candle. Let's see what the next one is. Nope. The next one is no good. And you can see that because it's not a red candle, right? Oh, the other thing I forgot to mention is that we need to have the second touch is lower than the first touch. That's a very important rule. In fact, second touch is lower than first touch. And so the fourth rule should be the trigger. So let's just change that. Okay? So second touch is lower than first touch. And so let me show you what I mean by that. This first touch up here, the highest candle was at 62.59, right? Now over here, at the second touch, the highest candle is at 62.55. So it's 4 pips lower. The highest touch is 62.55. The highest touch is 62.59. What that means is this qualifies as a moolah top. Both touches hit the zone? Yes. Boom, boom. 6 candles between touches? Yep, sure are more than 6 candles in here. The second touch is lower than the first touch? Yep, it just made it by 4 pips. And we get a trigger candle. So far, we don't have a trigger candle. So what this means is sometimes what you'll see is you'll see all of these things line up, and then the market will explode and bust out and go beyond it, and it will actually break out, okay? But when that happens, you usually will not get what's called a trigger candle. This is still not a trigger candle, right? This one, it's a nice little red candle. Okay, now we're getting interesting because this candle's closed lower than all of these candles over here. But let's just say we're still not interested. Let me show you what I mean. See how this candle is closed right here? That's the lowest close we've seen since the market has come up here. And what that means is if we go to the line chart, you're going to see that the line chart starting to bend down now. It's looking like it might fall. But let's just say that even though this is the lowest close here, it's such a tiny candle, I'm probably not going to say it's a bearish trigger. So let's just wait for the next one. There it is. That's our bearish candle right there. Now, unfortunately, we've really moved away, from the top. But at this stage, I would say, okay, we've got our bearish candle here. We can go ahead and take this sucker. And what I would say is now we're off to the races, right? The stop loss, which is the number 5 here, is above the first touch. Above first touch. Not the second top, but the first top on the double top. So it's actually up here. Let me draw it in so you can see. It goes right here. Right there. That's our little stop right there. So we'll make it, red. Stop goes right there. Now, ideally, we can get in on the close of the trigger candle, or we can put a few pips below that trigger candle, we put a sell order. Now, where would be the target here? Target's really easy. It's a very simple target. It's going to be down here at these recent lows. Basically, where this zone is here. This zone should probably be scooched up a bit and should be somewhere in this area. So this would be our target. So I'll go ahead and make that green. That's where the profit should be taken. Whoops, I made the line green. That was a mistake. I want to make this green. Yeah, that should be green. Okay, cool. So that's our target. Stop loss up here. Now, the second target's going to go where? Second target for me on this one goes right here. Right here. See where the market topped out here and it topped out there? That would be my second target. So I would actually extend this all the way across. And I'd be looking at somewhere around 57.30 or so. Right around 57.39, 57.35. That would be my second target. And what I generally do is I move my stop to break even after it hits the first target. Yeah, it's not very good reward to risk, Matej. And the reason why is because the the trigger candle was so far away from the price. And so you might not want to take this, right? You might say, you know what? I don't want to take this because on this one, we're risking 219 pips to make 138 pips, right? So you may not want to take it. Now, or you might want to just go only for target 2. Target 2 is 300 pips away, and you're risking 219 pips. So that's another option, right? So let's just see what happens here. Obviously, the market does go lower than our alert candle, our trigger candle, and then it sits here, and then it hits the support level right here, takes out the target. We can move the stop here to break even now. And then it comes back up and hits the break-even stop. If you were targeting target 2 down here and you move to break even after the market hits this first zone, you also would have been stopped out, right? So either way. Now you can see it's come back down here. Maybe it's going to break through and go down there. No, it is a huge bullish candle. And now I think that's where we're at right now. We're up here, and we've basically made a really strong run at this level. Gabriel says, yeah, I like to take half, just free. I like to take half at target 1, basically. I usually will always move my stop, Michael. Do the same rules apply to triple tops? Black Hat, never. I never do that. I found that triple tops are generally more likely to be breakouts. kind of like what we have here. See how we have like touch 1, touch 2, and this is touch 3? I find that the third touch is much more likely to be a breakout, and the fourth touch is even more likely, and that sort of thing, and so forth and so on. The 2-touch thing is really good, but the third, fourth, fifth touch, I stay away from those. I found them to be really unpredictable, so I don't do it. I don't reduce position size. Well, yeah, when it hits target 1 like it did right here, then it's time to go to break even, right? And then I shoot for target 2. Now, in this case, target 2 never came close to target 2. Never, ever came close. But what it did do is it definitely took out target 1, right? Walter, Gabriel says, would you take the trade also if the second high goes higher than the first touch, but then closes really bearish and inside the previous touch? If the second high goes higher than the first touch, no. That's a different trade setup, Gabriel. We could there's a whole set of rules for that one. And we might get into that at one of these sessions. In fact, maybe we can do that next month, Gabriel. Maybe next month we'll have a webinar on a special case of that kind of trade where you actually have a higher touch on the second touch. This is the one that has the lower touch on the second touch. And this one's really kind of cool. But the other one's a little bit tricky. It's a little, I consider it kind of like a more advanced way of trading because everything has to line up. But the reward to risk ratio can be phenomenal for that one. It's a little bit more aggressive. Okay, next month we'll do that then, Gabriel. I'll make a note. Yeah, there's an inverse head and shoulders pattern, says George. Yep. I think you're talking about shoulder, head, and shoulder, head, and shoulder. Are you talking about shoulder, head? Yeah, I can't see it. Yeah, I would take a sell here on the pound if there was a bearish setup here. If we had a big long, yeah, I can't see it, George. First I thought it was here, like a shoulder and then a head and then a shoulder, but then the problem is the shoulder takes out the head, so I can't place it. Let's do some more examples though, for sure, guys. I think we had some currency pairs that people want to look at. Michael P says, have you looked at doing this on the 1 hour time frame? Reason being is I used to trade daily, but the stop loss was too large, and then I went to the 1 hour and the stop and got more reward. Look, if you can trade the 1 hours and you're doing fine, I would just stick to that. The problem is you do a lot of babysitting, and I don't like that. And the other thing, Michael, is that in theory, it really shouldn't matter which charts you trade. You can trade the monthly charts and have the same amount of risk, dollar amount of risk, as you would on the 5-minute charts. And the way that you get that done is you have a broker that allows you to set your lot sizes. So you might be trading for 1.3 cents a pip on the weekly chart trade, but then on the 5-minute trade, you're trading for like $3 a pip or something like that. Do you know what I mean? So in other words, if you find your account size dictating the trades that you take, I think that's dangerous. That's my opinion, is that you should be able to trade what's comfortable, what fits with your lifestyle. And for most people, daily charts are pretty good because, you have a job or you have a family or whatever. You have other things going on and you don't want to just sit in front of the charts. It makes no sense for the daily chart trader to sit in front of the charts. It just makes zero sense because what are you going to do? Sit and watch a daily candle form? That's crazy, It's like watching an apple turn brown, It's just no fun. So, I wouldn't do that. So Michael, if you can, I would find a broker that allows you to set your own lot sizes. And that means you don't have to trade the 1 hour. You can trade the daily, the weekly, the 4 hour, whatever you want. And you still risk the same amount. Like, let's say So let's say you risked $300 every trade. If you're risking $300 every trade, and you set your own lot sizes, you can put that specifically at $300 on every single trade you take. Doesn't matter the time frame. So it's perfect, yeah. Walter, you didn't explain the two types of bearish candles. Yeah, I was going to get into that. So here's what the bearish candles look like. Let me go to the 1 hour on this pound chart because we did have another example down here. And it was this one down here. This was another, you'll notice that this fits the rules that we talked about before. Okay, first of all, 2 touches on the zone. 1 touch here, a second touch here. Now, what will sometimes happen is the second touch is so different from the first that it actually doesn't the candle doesn't physically touch that area. That's okay, right? That's okay. That's not a problem. But let's look at our rules again. First touch is lower than the second touch. So this is the exact same rules that we looked at before on the moolah, which was the double top. This is called the whammy, which is the double bottom. The whammy makes a W, of course. It goes boom, boom, bam, and then goes up like a W. And the moolah makes an M. So it goes up, touches it twice, and then falls. So this is the same thing. We get a touch here, right? And then the market goes away for at least 6 candles, comes back down, we get another touch here. And then where's our trigger candle? Well, the obvious choice here is this big blue candle. This is the largest candle. Now, even though it didn't close on the high, it closed so much, it was such a big candle, went so much further than all these little tiny candles not going anywhere, that we finally know, okay, it's finally starting to take off. So a buy here on the close of this candle and a stop loss down here is 67 pips of risk. We could be looking at up here for 50 pips where these candles topped out at. We could be looking at the bottom over here of these candles. That's 159 up here. Lots of places we could go here, but clearly it definitely hits target 2 here, right? It does not come back down and stop us out. Let's talk about some of the types of candles that I look for in terms of, bullish or bearish candles. A bullish candle should be bigger than the other recent candles. And a bullish candle should have a nice high close. But the main thing that I like about this one compared to all these candles is, remember, we're sitting here, we're watching the market. We've seen all of these candles print recently, really tiny ones, and then bam, all of a sudden we get this really strong one. That's a great sign that the market's getting ready to take off. If you were talking about bearish candles like on the one before, the ones with the really long wicks, right? Those of you that know kangaroo tails, those are really good. So this is a really nice bearish candle right here. It's got a nice long wick, and it's got a nice bearish close. This is another nice one right here. Not because, well, actually I would say that's more of a neutral candle. I wouldn't take that one. Sorry, that's a bad one. Here's a nice one right here where it has a close on the low. Here's another real beauty right here. Another close on the low. Basically, we want to see candles that fit the, either they have one of two things. They have a long wick, right? Or they have a strong close. So the long wick means that the market couldn't close up high and it came back down like this one. That's a nice bearish candle for that. And then the other one, of course, is when you get the close down near the low, like this one. So those are the two things. And also the length of the candle is important. Kind of like back here when we were talking about this whammy, because the candle is so much larger than all of these previous candles combined, it tells us that there's some volume moving. And that's kind of what this means. It means that the market is ready to take off. And of course it does. And to me, looking over at the left, we can't look over to the right, of course, because that's hindsight. But looking over to the left, to me, the most important spot to look for profit would be here. And then there's a couple possibilities here. And then possibly here. So there's 3 spots that look really good in terms of where to take profit. So these tops right here, these bottoms right here, so the tops up here were achieved up here. the bottom's here, and then of course the top's right here were achieved right there. So all of those spots came into play later, and any of them would have been targets. Now we couldn't really use this one because it was too close to the entry. This was obviously the obvious one here, but that was so close to your entry here, it's probably not going to come into play. It could be like when it hits here, we move to break even, or But yeah, this one is just too close because if we were looking at reward to risk, you're looking at a risk of, what do we say, 67 pips, and then a reward of 50. So maybe not going for that. Or maybe going for the 100 pips up here, something like that. Ravindu, can you mark the support and resistance on a higher time frame and execute on a lower time frame? Yes. Walter, you didn't explain. So does that make sense, Groove, in terms of the different types of bearish candles? The bullish candles are the same. They'll have a long wick that extends down to the support level, or they'll have a nice big body. Like this one doesn't have a strong close, but it has a huge body. And it's obviously the bullish candle. It's a bullish candle. Ideally, you will have a close up near the high for a bullish setup, or a really long tail, and then it comes back up and closes near the high. That sort of thing. Okay, great. Michael has an E8 that triggers. That's awesome. That's great. Ria wants to see the Canadian dollar. I talked about this one yesterday for those of you that follow my trade. Canadian dollar, basically I'm looking for it to break below this. I'm looking for like a shoulder, head and shoulder sort of on the Canadian dollar. But let's go ahead and look for some double tops. Wow, this chart's wild with all these lines and stuff. Let's see if we can find any. Let's just kind of advance the charts here and see if we can find any setups. I know I'm on the 1 hour chart and I've got my daily support and resistance levels here, but let's see what happens. Okay. I would probably have to draw a line here. Because the market found resistance here and support here, and I know I'm on the 1 hour, but on a 4 hour chart, this is going to look like a really good spot. Let me just double check that. Yeah. Oh yeah, it looks really good over here. Let me get rid of all these lines because they're just bugging me. They are awful. Now's a good time to ask questions if you have them. Just type them in there and we will get to them eventually. So yeah, so this green line is pretty good on the 4 hour. Support, resistance, support. So on the 1 hour, you can see, I don't know where I am now. I think I was around 11th or something. Let's see. Yeah, there it is. Okay, came back down and touched it right there. Okay, so now the question is for me, is this touch going to be a higher touch? It's more than 6 candles between touches. The other thing about this one is that the market hasn't really been moving down, because ideally I want to take a buy trade when the market's been moving down. This is more of a ranging market, so it's not really the ideal situation here. In other words, I could probably draw a box around all of this price action here and just say we're stuck in this box, So in a lot of ways, this doesn't really make sense as a good trade, but let's just go ahead and use it, for the purposes of our rules that we have on a whammy trade. And let's see if this turns out to be a whammy. So far, I've got no trade, right? I don't know if it's going to bounce here. It might break through and just keep going lower. But if it turns around and looks like it's going to find support here, then I would wait for a trigger candle. Well, there you go. So it's made a lower low here. See how it's made a lower low than this one? So already I know there's no trade here. So there you go. So it's a no trade. Let's see what happens down here. We could get one down here maybe, in this area. Okay, it touched here. It's moving up, so let's see if it moves away for at least 6 candles and then comes back down. Yeah. Is it going to come back down? Ah, that's a good one. Let's see what the low is, though. The low, might be equal lows. 104.14. and 104.14. So they're equal lows. This candle has a 104.14 low, and this one does as well, which is unfortunate because this one is such a strong bullish candle. I like my chances on that one, but that wouldn't qualify. So that would be a no trade. Yeah, look at that. It went right up. And you knew that was going to happen, or was likely to happen based on the strength of this candle here, because it was such a strong candle. And of course, it went straight back up there. Okay. Let's go. To be honest, I don't like this chart. It's just too messy. There's a lot of choppiness. Let's go to some of the other charts that people wanted. I think the euro came up earlier. So why didn't I take it, Drew? Because the low, it didn't fit my rules. The second low was not a higher touch. It was an equal touch. I like to go for closes. No, equal doesn't count. Let me just go over the rules real quickly on the pound here. Whoops. I killed it. Oh, did I lose my... Oh, no. Where's my chart? So... Anyway, the rules are... we talked about the rules here. There it is. Oh, yeah. Okay. Wonder what I did with my chart. I must have killed it. Let's see. There it is. Okay. So all the rules are here. A higher touch on the whammy, which is a double bottom. Here, let me just bring it up here so everyone can see. Both touches must hit the zone. Obviously, on the second touch, it's not as critical if it comes close to the zone. 6 candles between touches. The second touch is lower than the first touch on a moolah top like this one. Obviously, the second touch is higher than the first touch on a whammy or a double bottom. The trigger candle is a big bearish candle for a moolah. Obviously, it's a big bullish candle for a whammy. And the stop loss is above the first touch or below the first touch, depending on if it's a buy or a sell trade. That means stop loss is above the first touch. So those are all the rules here. You can email me and I can give you a book on this if you don't have it. There is a book on this. No, the equal touch doesn't work. Yeah. Okay. So, sorry. Yeah, I'll put that up. It's walter@fxjake.com. You can, if you email me, I will just put in the subject, put a whammy or moolah trade. Put whammy moolah in your subject and I'll send you the book. walter@fxjake.com. Okay, so let's go. I know we have some more questions here that people want to see, or more pairs that people want to see here. I want to make sure that I get into them before we run out of time here. Let's see, what were the other ones? Euro, I thought, was one. Shoot. Jesus says Euro pound 4-hour candle. Okay, Euro pound, let's go. Let's go. Euro pound. 4-hour candles, and the date was November 7th and November 22nd. Oh, yeah. Okay, yep. Now, I don't have a zone drawn here, but let's just see. Yeah, this is a little bit scary. Here's why. I believe that the best zone is probably this one, to be honest. Right here, off these touches. And if failing that, if I'm going to go with another zone, I would probably go here. So let me zoom in so you can see better. But in other words, it looks like the market's almost busted through the zone. So we've got a zone here, right? And then we've got another zone down here, but, It's almost like it's busted through. It's not very clean. That's one thing I don't like about this chart. This one is not clean. So you've got your touches here, you've got your touches here. The problem is it blew through it here, came back up, blew through this one, you know what I mean? It's a kind of a messy chart, kind of like the Canadian dollar, so it's not, I know what you're saying. What you're probably looking at is you're saying that you drew a zone here, right? Okay, so I'm assuming that you had some sort of daily chart zone on your, is that right? You had a daily chart. This was a daily zone on your chart. Let's just see. Yeah. See, I really like the 84 level much better based on all these touches. And let's see here. Yeah. I could see where you might make a case for it. You probably have to draw it a little bit lower, though. You probably have to draw it down at 83. And where is it right now? So right now it hasn't hit it yet. Yeah, I would probably have to say that the zone isn't that good. So it kind of doesn't fit rule 1, you know what I mean? But let's just say you wanted to take it. So let's say we took it. Okay, so we have this touch here, and then the market comes back, a month later or whatever. Looks like the second touch over here is 55 candles later. And then finally we get our trigger candle right here. This is our trigger candle right there. That's the one, the big bullish one right there. The market starts trading higher and it goes. So a target would probably be right here. Let's just assume that we do have a zone here and that we're not worried about it. I would probably argue that the better zone is higher up here. But let's just say that we've overlooked that. Now, what we see here is that our market is inching up, and our stop loss is going to be down below this wick. So the risk on this one is going to be approximately 42 pips. And the target's going to be about 65, 66 pips up here. And right now you're essentially at break even or plus 10 pips or something like that. Yeah, that doesn't look too good. There's another thing that should be said here about these trades. Sometimes it can be too many candles between touches. 55 candles is a lot. Remember, we're kind of looking for double bottoms and double tops. And, if the market doesn't come back for a long, long time, the question is it still sort of the same move, or has it moved on to something else? Like, for example, if the market were to come back up and touch up here at 85, 82, I wouldn't count that as a double top at this stage. It's been too long since it touched here, So, yeah, this is an interesting one. One, because the zone isn't that strong. Two, because it's got so many candles in between. It's not in that, the sweet spot for me is like 6 to 20 candles. That's kind of the cool, nice, spend some time away and it's come back. Once you get into 50, 80, 90 candles, it's almost like it's been too long. So I don't know. You might want to test that and make sure that you see the same things on your charts that I do. Yeah, I would say 83 is the better zone here. I think we had someone wanted to look at the Aussie maybe, or what was another chart that someone wanted to look at? We have another minute or so minute or two we can probably do. Euro Kiwi. Okay, Euro Kiwi. Right here. Yeah, this is kind of cool right here. This is, hold on, let me go to the 4 hour. Yeah, okay, so here you go. Here's one right here. Let's say that you've got a zone drawn on your 4 hour right here because of all these touches here of support. And if you go back, you find out that you've got support back here, resistance here, support here, support there, support there, support there. So you like this zone, right? So let's say that you like the zone. So what we would be looking for here is the market needs to start turning away. So we want to see the line chart give us a strong bend here, because when it does that, that means we actually have our trigger candle. So what we're waiting for on this one, first of all, let's just put this up here. The stop loss would be above this high. I'm glad this one came up, 66.40. So this is 66.40. That's the stop, right? And then the target would be down here, where the middle of the candle, the middle of the moolah is right here. So that's the target, which is 63.85, right here. And the trigger is going to be when we get a trigger candle. There's also another target lower as well. That lower target would be, I'll show you 1 second. Down here. Probably I would draw it like right here, which is 62.80. So 63.85 and 62.80. 105 pips lower. So that, to me, is a really nice setup. If we get a big red candle that closes down near the low, or a long wicked candle that doesn't take out this high, then that would be the trigger candle here. This is looking like it's probably going to, this looks like it'll probably throw a signal up. The second touch is lower. Yes, that means it qualifies. Because this second touch is lower, so far, this is a moolah trade. Yep. If it were a bullish candle, a bullish setup, then the second touch should be higher, right? But because it's a bearish, so what you're talking about here is a special case of a double top where the second touch is lower. When we talk about the double bottom, it's a special case of the double bottom where the second touch is higher, like this one. Here's the first touch. Now again, let's just assume this is on a zone here. I don't have it on a zone, but let's just say I have a zone here. First touch is here, second touch is higher, right? Trigger candle's right here. It goes straight to the first target right here, which are these lows here. Second target would probably be these highs here or these lows up here, and it certainly gets there as well eventually. So that would be another one there. Obviously, we want to see the market going up for some time. It's been going up for some time. It hit, came back down, hit again. So this is a really good one. Who's asked about this one? The entry, there's two entries on this one. The entry would be the close of the trigger candle, or like 3 or 4 pips lower. I like 5 pips. I use 5 pips. 5 pips lower than the trigger candle. That's the more conservative entry. So conservative entry is 5 pips lower than the trigger candle. Aggressive entry is get in when the trigger candle closes. And just as an aside, this candle is not going to close for another 3 hours on my chart. This is a Euro Kiwi 4-hour chart. It's going to close in 3 hours. So there you go. Ramesh has been following this one for a while. That's a great example of what we're talking about, Ramesh. This is a really good example. Now, if we don't get a trigger candle, then that means the market's probably going to bust out and go higher, and then it's probably going to go up to this level right here, right? But if we do get a trigger candle, this is a really good trade. This is one that I would consider this to be a really good trade. Yeah. Yes, the entry is after the close of a red candle. We need a big red candle somewhere in this area. Somewhere up here over the next, say, 3 candles, we need a big red candle to give us our entry. Or a kangaroo tail, if you know what that is. Yeah. I think we have a big candle is, okay. Big candle is relative. So, this candle right here is not a big candle. That's a little candle. This is a big candle. That's a big candle. That's a big candle. These are big candles here. But, this is a little candle, little candle. We need a candle that closes down near the low. Ideally, it would be this one, obviously. But we're 3 hours away from the close, and it could look totally different by the time this candle closes. Yeah, if it closes below the previous candle, that would be even better, because that means you're going to have a really sharp line here, a really sharp bend on your line chart, and that's a great clue. That's a brilliant clue. No, I don't trade triple tops because I find them to be unreliable. I really appreciate guys spending time here. It's really nice of you to show up. I don't see the Aussie Kiwi one that you were looking at 120. Aussie Kiwi 120. Or 112. Yeah. Definitely right here. I see what you're saying. So if the market comes back up here, we could sell it when it gets to 112. Yeah, definitely. Yeah. Yeah, that looks really good. Thanks, Drew. I'm glad that you like the webinars. Thank you very much. Thanks, Dia. Thanks, Luca. Have a wonderful week, guys. I hope you have a wonderful day. I appreciate all of your time, and I wish you happy trading. Thanks, guys. See ya. Bye, guys. Have a good one. Bye.